Every time I post a video about installing solar, one of the most frequent questions I get asked is, you've not factored in the opportunity cost. Basically, what if you invested the money instead? And to be fair, that's a completely valid point. So instead of arguing in the comments, I built a tool to actually answer it properly and show you, did you make a mistake? Should you just have invested your money in the first place? Now, in a moment, I'll show you how the tool works. But if you disagree with any of the numbers I'm going to use, you can change them yourself. The premise is this: you're considering putting in solar, maybe a battery solution as well, with the plan of negating your entire year's energy bill. The plan is to generate enough excess in the summer to cover your winter bills, basically leaving you with a zero bill home. Now, a few years ago, a system of this size would have been prohibitively expensive. But today, with prices dropping, you can build a system like this for around £20,000. So that's the starting capital we're going to use. We'll take an average home's annual energy bill of, say, £1,600, and by the end of year one, we'll assume that we don't have an energy bill, and instead of spending that £1,600 that we would have paid to the energy company, we're going to invest it in an ISA. Now, on the investment side, we're going to take our same £20,000 and invest it into exactly the same ISA. So that way, the returns for both the invested money and our solar returns are being treated equally. Now, before we jump into the tool, let's talk about the thing that most of us do, and that is chasing our payback period. And this can be a little misleading. Payback only tells you how long it's going to take for you to get your money back. It doesn't tell you what happens after 10, 15, or even 25 years. And that's where the real differences start to show up. So in the model we're going to talk about today, we're factoring in everything that we can possibly build into this model. We're going to factor in degradation in your solar panels. We're going to talk about reduced performance in your battery. We're going to talk about maintenance and replacement costs. We're going to factor all of those in to give us the most realistic model we can of what would happen to our money. So I built this calculator and I put it on my website so that anyone can access it. And as I said, if you disagree with any of the numbers that I'm using, they're all there for you to change. Now, you can find it by going to my website, jonathantracey.com, head up to the menu at the top here to Tools, and then scroll down till you see Solar versus Investments. It's the bottom one on that list. And it will bring you to this page. And it's pretty simple. There are a set of core assumptions on the screen here. There are some solar specific assumptions, and then there is the chart, which we're going to play with in a moment. Now, this is not an energy simulator. It's a financial model. Now, this is something that you could build in a spreadsheet. If you were an Excel expert, you could probably put something like this together quite easily. But the vast majority of us aren't. I happen to be able to code a little bit in HTML, a bit of JavaScript. So therefore, I've been able to build this a lot quicker than I'd be able to build it in Excel. Now, everything that you can see here is calculated in pounds. But if you're using a different currency, if you're using dollars or euros, then just ignore the pound symbol. Numbers are numbers. Everything is calculated month by month. So interest rates and everything are applied monthly, even though the totals are shown yearly. So let me walk you through the inputs. Now, as I say, at the top of the screen there, you can see we've got our starting capital. Now, this is the same whether we're investing the money or if we're buying a solar system with it. And that is set by default to £20,000. Again, don't agree with my numbers? Feel free to change them. Now, every little thing here has a tooltip. So if you're not quite sure what they are, just hover over the little eye and you'll get more information about it. But we've got our capital. We've got our annual investment return. Now, this is probably the bit where we'll get the most arguments. So yes, there are investments, certainly some stocks and shares ISAs that are returning 10% a year, but they're not returning 10% a year over an average of about 25 years. So what I'm asking you to do here is to pick a reasonable number, but You can put whatever number you want in. I'm going to say 5% is a pretty reasonable number, and we'll come back to conservative versus optimistic outlooks in a moment. But I'm going to say an annual investment return of 5% over the long term, over about a 25 year period. Then we put in what our energy bill is that we're negating. As I said, an average house in the UK is about £1,600. So we've put that in there. And how much is our energy bill going to go up because of inflation over the period? Again, an average across about a 25 year period. So I've set it to 4%. Now, obviously, that's way above the Bank of England's target base rate of 2.5%. But I don't know if you've noticed, we haven't been at the Bank of England's base rate for a number of years. But again, you can set that to whatever you want. So in fact, let's do that. Let's set that now to 2.5% and say that we'll just follow the Bank of England base rate. Okay, so that's our ISA setup. We're going to put £20,000 in it. It's going to grow by 5% per year. We're going to take £1,600 a year out of that to pay our energy bill, and our energy bills are going to go up by roughly 2.5% per year. Then we come to our solar specific assumptions. So as you can see here, we've got our export growth rate. Now, because of the way we've set this up is that we're going to consume some of our energy to save us buying it, but we're also going to export some energy during the summer because we want to offset our winter energy bills. But traditionally, the export rate doesn't really grow in line with the rate of inflation. So we're saying here, our rate of inflation is at 2.5%. Maybe our export growth rate is only going to be at 1%. So it's not going to track with the rate of inflation. We're also going to say, how much do we have to put aside for failures in the system? What if our inverter packs up after 10 years? What if we need to replace a battery? Costs will be incurred over the period of the time. Now, the system will have a warranty. And again, you can set that here so that the maintenance payments start after a specific year. So if your system comes with a 15-year warranty, put 15 years in there. I'm going to leave it at 10. And I'm going to say, I'm going to work on the principle that about £20 a month, so £240, £250 a year, that I'm going to put aside to cover anything that pops up. So whether it, like I say, a new inverter, new battery, but we're going to save about £250 a year towards that. And as the system gets older and gets out of warranty, then we're likely to need that money. We've then got panel degradation. So solar panels, although they will last for 25 years, they will get slightly less efficient each year. So I'm going to put in 0.5% a year. And for my batteries, I'm going to put in a 1% degradation per year. Again, don't like my numbers, put in whatever you want it to be. Okay, so once we've got all that information into the model, now we can have a bit of fun with it. So I'm going to scroll down here. The first thing I'll do is I'm just going to turn off what's called the solar net position. Let me scroll down here so we can see our chart. And I'm going to roll it all the way back to 1 year. So what we're seeing here, this is our investment pot. So this is our £20,000. We've put it into our ISA. We're earning 5% a year. Our energy bill is £1,600 and our energy bill is going up by 2.5%. So you can see there, we start off at the beginning of the whole run at £20,000. And after the end of the first year, our pot is down a little bit. We're down at 345. And that's because we've taken £1,600 out to pay our energy bill. We've obviously accrued some interest, but that's what our pot does. Now, at the bottom of the chart here, you've got this projection. So you can then scroll this forward. Let's take it out to 10 years. So if we are taking our energy bill out of our £20,000 that we've got in our pot is going to decline year on year. And at 10 years, it's only going to be worth £9,489. So as you can see, this pot is not going to last forever. And the reason for that is we're taking money out every year to pay our energy bill. We're also taking, our energy bills are going up by, I think we set that to 2.5%. And we're getting 5%. So we're getting a little bit topped up from the interest, but we're taking out money. So it means it's going to decline over a period of time. Now you can see up there, it shows you there, that's what our pot value is. Ignore the other numbers for a moment, we'll come to those. But we also get a summary here. This is what this means. 10 years investing, we're ahead of solar by 8,503. So let's turn back on the solar position so we can actually see what happened in the same period of time. So again, we started out at minus £20,000 because we spent £20,000 on our solar system. But we're taking the money that we would be paying for our energy bills and we're putting it into the ISA. And we're saving that and we're accruing interest on that. So you can see that our solar position increases every single year. And when we get to our 10-year point, we've just crossed over the zero mark. So just past the 10-year point, we've earned enough money back from this to pay off our entire solar system. So we've got our £20,000 back. It's back in our hands. Well, it's actually in our ISA. So we've still got £20,000 and we've paid our energy bills. But if we'd have invested that money, we'd only have £9,489. We'd still have paid our energy bills, but we would be nearly £10,000 worse off. So let's leave that there and let's scroll forward another couple of years. Let's go to 11 years. You'll notice the lines are converging. When we get to 12 years, you'll see we hit the break-even point where the two lines cross. We'll push it out to 13 years so we can actually see what's happening. So at 13 years, if we scroll down to the bottom, we can get some information about where we are. So we can see what our final balance is, how much we've paid in our energy bills, what our monthly energy costs are. And don't forget, our energy costs have been rising with the rate of inflation. So you can see here on the solar side, what our solar pot's worth and all the information that you're going to want to see. And then look at the top here. Look at this line. It's changed from red to green. And that's because at 13 years, solar is ahead of investing by £4,761. And this is because every month when we instead of spending that £1,600, we put it into our ISA, we're compounding the interest over the years. You can see we're starting to really make a return on that investment. Now, again, I'm going to keep scrolling this forward, 16, 17, 18, 19, 20 years. Now, if I scroll down at 20 years, we take a look at those stats, you'll see that our pot was depleted at the 15-year point. So our £20,000 that we put into our ISA has gone because our energy bills at that point are significantly more. In fact, we've paid out £41,338 for 20 years worth of energy bills. And that means we are currently £12,000 in the red. Whereas on the solar side, we're at £32,000. And not only have we recovered our £20,000, we've recovered our £20,000 again, and we've got another £12,000. And because this is all invested in an ISA, you're not paying any tax on it. So again, you can scroll this model forward. You can take it all the way out to 30 years if you really want to rub it in and see how much you'd have paid in an energy bill. The total energy bill for 30 years is £71,000. Now, we don't think about that when we're paying our electricity bills. And again, this is assuming that nothing really changes. It's just a small, modest rate of inflation at 2.5%. There's no major crisis in the world. Nobody's invading other countries and cutting off oil supplies. In 30 years, we would have paid out £71,000 for our energy. Now, again, you can change any of these numbers. So let's say you want to push the rate of inflation up a little bit. Let's push it up to 3%. Let's say you think, actually, well, yeah, my investment strategy is paying off really well. I'm going to, sorry, not 510. I'm going to say I'm going to get a 10% annual return. What does that do to our numbers? Well, it changes the shape of the graph quite a lot. So let's scroll down. Let's wind it back a little bit. So we can see there, I'm going to turn off the solar projection for a moment because look at the shape of the graph. So at 10%, your pot would actually grow, but not forever. If we start to scroll forward there, you'll notice after 16 years, you're basically back to where you started. So even at 10% growth, which is really unlikely, you're not likely to get 10% growth, your pot is only going to cover your energy bills for the first 16 years. And at that point, it's inevitable. It's going to dive down, and at about the 27-year point, you're out of money. So this is why I say that, yes, there is an opportunity cost, but no, solar is still the better investment, in my humble opinion. Now, there are a couple of buttons underneath here. Let me just reset everything. So we'll turn solar back on. We'll go back to our 10 years. So you'll notice we've got these other buttons here. We've got scenarios. So again, if you don't want to fiddle with the numbers up the top, you just want to see, you know, what does a conservative estimate look like? So conservative means you get a 4% return, that inflation is at 4%, your export is at 1%, and you're paying a little bit more in maintenance for your batteries or a replacement inverter. So again, you can change those and it will change the graph. But the interesting bit here is, let me push it forward again to about that 13-year point. It really doesn't matter if we select the base, we select conservative, or we select optimistic. The point at which your pot runs out changes by 6 months. Let's just project forward a little bit more. You'll notice there. So even at the most optimistic, base, conservative, it doesn't really have that much of an effect. Over that period of time, because you're taking money out of the account, you're constantly losing money. And this is the real difference. One option uses your money to pay a bill. The other removes the bill and turns that money into something that can grow. Now, is solar always better than investing? No. If your investment returns are high, if energy prices stay flat, if the system you installed underperforms, then investing could come out ahead. But if energy prices rise, which, given everything we know, is more likely, and the system performs reasonably well, then solar can outperform over a long period of time. Now, as I say, the calculator is live. It is on my website. I'd love to know what you think. Now, this isn't supposed to be some in-depth financial tool. It is something that I built to answer the question for myself, and I thought you might like to play with it. So with that in mind, please let me know in the comments below what you think of it. Because the answer isn't always what you think. I honestly didn't know that it really didn't matter what I did with the interest rate, that pot was always going to disappear. And as my maths teacher used to say, maths doesn't lie. So that's it for today's video. I hope you found this interesting. Please go to the website. Please try out this tool. I don't put any of these tools behind paywalls or membership schemes, Patreon or anything like that, because I want you to try them out. I want you to have a look at it. Tell me what you think. Tell me how you think it can be improved, and I'll do what I can to add new features and functions as we go along. With that, I'm going to sign off. It just remains for me to say thank you very much for clicking on this video. It means the world to me. And if I'm lucky, I'll see you back here real soon for another video. Take care. Bye-bye.